You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right. Hi, everyone, and welcome to the Daily Currency Call presented by Forex Trading Asia. And thanks to all the LCMS Trading Club students that are joining the call live. Happy Wednesday to everyone, or it might even be Tuesday evening. I think we've got Gary here. So good evening, Gary. But if you are new as well to the call, a big welcome. And if you are watching this on YouTube, make sure you go to the Jindao Thai website to get subscribed to the LCMS Traders Club as well. That's a big must if you are looking to advance your trading skill set. And before I get going, just a quick introduction as well. This is the currency call. It is the 5th of January, 2022. And in the currency call, we go through the pairs as follows. So every morning at 11 a.m. GMT +8, Monday to Friday, we start the week with Aussie and Kiwi on Monday. Tuesday, the Euro. Today is the pound for Wednesday. Thursday, we've got yen and gold. And then Friday, we've got CAD and crypto as well. And within the currency call, we discuss the main breaking news events. We go through the economic calendar and highlight the key points to pay attention to and what the data actually means. We go through potential trade ideas. We go through the risks and the potential take profits as well. And we go through anything else in the economic calendar that is important for traders, and we'll also sometimes feature some educational points as well. But just before we do get into the call as well, I just want to share a disclaimer too. So it's very important just to understand that any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. And we are always here as well within the LCMS Trading Club platform on EchoFin just to help out as well. So if you've got any questions, you've got feedback, please let us know as well. And we are happy to help. But just to get started, we did have the OPEC meeting yesterday, and we've got Kim Hong here, currency strategist at LCMS Traders, just to discuss the details as well of the meeting. So over to you now, Gimme.
All right, thank you, Scott. Happy Wednesday, everyone. Nice call on Euro Pound. Yep, I will go through that later on. Be sure. All right, let's go over to OPEC. So, 24th OPEC and non-OPEC ministerial meeting. This is basically their summary, okay, of the meeting. What's changed? Nothing has changed, okay. They have decided to hold the production hike unchanged at 400,000 barrels per day for the month of February. Okay, so well, 400,000 every month, you know, probably by April or maybe mid of this year. Okay, the OPEC Plus will be able to recover all the loss. Well, I wouldn't say loss, but all the cuts. Okay, that they have carried out during the pandemic. Okay, so okay, pretty, I would say, optimistic view coming from the OPEC. It wasn't, I don't think it's stated here. Yeah, I don't think it's stated in this statement, okay, but during the press conference, all right, they actually downplayed the whole Omicron variant, okay. This is what they said, I quote, "The impact of the new Omicron variants is expected to be mild and short-lived as the world becomes better equipped to manage COVID-19 and its related challenges." Okay, so pretty, I would say, you know, previously during the December's meeting, we were all well, everyone was actually concerned about the whole Omicron variant and its impact on the economy. Will lockdown be coming back? Okay, will there be more cases? Will it be a spike in cases? Will it be more deadly, you know, rise in death cases and things like that? How will the oil demand be impacted? Okay, but well, apparently coming from the OPEC Plus, they seem pretty optimistic, okay, in this whole COVID situation. Now, let me just go back to the previous statement back in December. You realize that over here, they actually mentioned the meeting remains in session, okay? Like I mentioned previously, in previous month, this statement, this line actually means that, the OPEC Plus is open to any revision in production hike as and when they deem fit, okay? Because at that time, the meeting was back in 2nd of December. That was when the whole Omicron variant was just like, was just discovered or just uncovered days before the meeting, okay? And everything was very uncertain, right? I mean, medical experts, they do not have enough data to actually tell if this Omicron issue is going to be worse, it's going to cause more cases and things like that. Hence, OPEC Plus was actually uncertain as well, all right? Which is why, concluding this meeting, they did not actually conclude the meeting, right? They said that the meeting remains in session, let it run. If there's a need for us to, cut production further, okay, we will do so, all right? But this time around, during the 24th meeting, okay, realize that the line, the meeting will remain in session, is no longer available, okay? It has already been removed from the statement. Hence, this actually tells us that, the OPEC Plus is actually very optimistic, okay, very positive, I would say, on the whole development of the Omicron issue, Omicron saga at the moment, all right? So with that, what it did to oil price yesterday, okay? Let me just show you guys this. Now, what you're looking at is the US oil, or it's actually the crude oil, WTI crude oil price, okay, on a daily time frame. So let me just put a line over here. Correct. So this red vertical line actually indicates the day that the OPEC Plus meeting was held. Okay, and you can see there was actually a strengthening of the oil prices. Okay, up to around like $77 per barrel. Okay, which is still high. Okay, which is still high. As you can see from when is this, like 3rd or 2nd of December. Ever since like the strong plunge, okay, there was a strong plunge in oil price from like 78 to 68, okay, some $10 loss, right, because of Omicron, okay, and ever since then, early December, there was actually a rebound and I would say a rally, okay, immediately, like, well, not immediately, but across the whole month, it actually recovered back to the 77 level, all right, so right now, we are seeing, we are hearing optimism from the OPEC Plus themselves. So, I'm not surprised that oil price may actually continue to rise. Okay. Now, when oil prices rise, okay, there is a direct impact on the Canadian dollar. Okay, which is why if we were to look at the US CAD, we see that there is actually a slight decline, okay, slight weakening in the dollar CAD. Not a lot, all right. Traded down to 1.27, okay. So this vertical line is actually, I shouldn't just put this line here, okay. So you guys can actually see the lower shadow over here. It actually tried to break below this 1.27 key level, round level, psychological level. But then guess what? In the end, it actually bounced back up. All right. So yes, optimism coming from OPEC Plus. But at the moment, remember, okay, the US FOMC is expected to hike rate 3 times this year. Okay, and tapering will end in March. Okay, so the battle between US dollar and Canadian dollar, if you ask me, I would say, I'm still bullish on dollar CAD. Okay. More on dollar CAD on Friday, all right? So this is just to show you guys, the impact of oil price on the Canadian dollar, okay? And let me see if there's any questions on OPEC Plus, dollar CAD, and things like that. No questions? Okay, so with that, I will hand it over to Scott for the DXY.
All right, thanks, Gimme. And just to get into it now, guys, we do have a little bit to talk about in regards to the DXY. We're still maintaining this range of The recent lows of around 95, 50, and then close to 97 was the highs recently seen as well. And the forward-looking projections for the short term, it's very challenging to sort of guide and say that it is going to be bearish for the US dollar. But what really should we expect? We do have that FOMC meeting minutes that are out 3 a.m. tomorrow. And that's going to be quite key, just to see if there's anything unexpected mentioned. Now, if there isn't, that's obviously neutral for the US dollar, but markets are obviously pricing in higher interest rates for this year, just with everything we've seen with inflation as well. So I think this range, and I was a little surprised. I thought we would see a little bit more of a pullback closer to 96. We didn't really. If we just go down to the 1 hour, we can just sort of see how we traded intraday. And, frankly, it was a little uneventful. We did have some news out as well. I just want to talk about that as well. So there was a little bit of news out last night that did slightly miss expectations. But if we just have a look at the main releases, we had the ISM manufacturing PMI that did miss at 58.7, although that's still quite a high number for that release. So it really didn't, have a great deal of effect in regards to selling pressure on the US dollar. We had the JOLTS job openings. Again, it did miss expectations, but it's still quite high as well. And really the main event is obviously coming up tomorrow morning as well. So it's just going to be something to pay attention to. We do have later today, we've got the Adp Non-Farm Employment change. Now that is expected to be a little bit down on the previous read at 534K. We've got 405 expected. And it's just going to be quite interesting to see if we can, hold up here with the US dollar, if we sort of maintain this above 96 level. And I think what it just looks like is, just going back to the chart as well, is that dips are being bought into. Now, obviously, it is a little bit of a slower state, because we do have that big news announcement that markets are waiting for. So even if we go to, maybe even the 4-hour time frame, you can see that it's quite choppy. Dips were bought into. I mean, this didn't even get to below 96. It was quickly bought into. So we might just see quite a tight range until we just get that announcement as well. So, but again, paying attention to that ADP release as well later today in the evening, 9:15 GMT +8 in the evening as well. So not really a lot right now, but it looks like pullbacks to 96 are being bought into. And then we do have a little bit of room to the upside to around 96.40 or so was the high that we saw last night. And if it can sort of hold up around 96.20, 96.30, we get that FOMC minute release, and then we might see it push forward, or it just might sort of hold. But for the US dollar itself, strength seems to be intact for now as well, unless there's some sort of dramatic adjustment. But really, that's very, very unlikely to be the case. So that's my thoughts on the US dollar. Now, it is Wednesday, so we do have the pound in focus as well. And we also have the euro pound to discuss as well with Gimme. So over to you now, Gimme.
Okay, back to me again. Pound dollar. Chart. There you go. All right. Looking at the pound dollar chart on a daily time frame, okay, we see that there is actually a strong rebound, okay, in the pound dollar since the final week of 2021, okay. So I think I've shared this on the Monday night session that because the Bank of England, okay, actually gave us a surprise. Okay, they actually carried out a surprise interest rate hike of 0.15% during the December's meeting that actually led to a strengthening of the British pound. Okay, and no doubt the US FOMC is also hawkish as well. Okay, but remember the UK central bank, they are the first one to take an interest rate hike action, okay? And we can actually expect more coming in from the UK central bank, all right? which is why, you know, we are seeing this strong, partly why we are seeing this strong rally of the British pound against the US dollar. Okay, to start off the year, okay, once again, as usual, my habit, I would like to put a vertical line. Maybe I should just change it to a dotted line so you guys can see it clearer. All right, and something lighter. No, bad idea. Okay, maybe like a blue line. All right, so as you can see, on the 3rd of Jan, okay, when the currency market started running again, okay, there was actually a weakening in the pound dollar, okay, but right after the next day, you know, right after the first day, okay, the second day, it actually recovered, and right now it is actually on its way up to my resistance level of 1.363. Okay, so you can see that, okay, another line here, that on the first day of the year, the British pound, okay, was actually challenging the 1.35 round figure, psychological round level, however you want to call it. Okay, so it actually tested to break below, right? But then, as you can see, the next day it actually came back up, right? So likely because of the hawkish, what do you call that, central bank actions, okay, from the Bank of England, as opposed to the Federal Reserve's, you know, ongoing tapering, you know, and any interest rate hikes will have to be, we have to wait until, you know, the QE ends in March, okay, before rate hikes are back on the table. Okay, so with that, my view is that, okay, since, okay, it tested but failed to break below the 1.35 level, I will continue to be bullish. Okay, I am continuing to be bullish on the pound dollar. Okay, hence I will look for buying opportunities on the pound dollar, and my potential take profit will be around, I would say, 1.36. Okay, 1.36 will be the potential take profit level, and then my stop loss, okay, will be below, okay, behind this 1.35 level, which I would say a safe level would be somewhere around 1.347. I think I should just change the color. All right, let me just get this color, this line away. Okay, maybe I should change this to blue. All right, so the blue line indicates 1.35 round level, okay, round figure level, that the British pound tested but failed to break below. Okay, now that it bounced back up again, okay, I will be looking for a buying opportunity with my stop loss at 1.347 and my potential take profit level at 1.36. Okay, should you hold all the way up to 1.36? I will be a bit careful about that, okay, because like what Scott mentioned earlier, the FOMC will be releasing its meeting minutes tomorrow at 0300 GMT plus 8, which is probably like slightly more than a few hours more than half a day. Okay, so it's likely going to be just a short-term trade, all right? Because you know you don't want to get caught by any surprises like what Scott mentioned. Okay, because if the Fed were to be review more details about when an interest rate hike can be expected, okay, maybe April, maybe May, you know, then we may actually be seeing a temporary weakness in the British pound, okay, in pound dollar specifically. All right. So because of that, you know, if you guys were to take on a buy trade right now, you know, you guys may be in profit, okay. But if the meeting minutes were to review more information on, you know, rate hikes and things like that, then, you know, you guys may actually lose back the profits for the time being. All right, for the time being. So I would say look for short-term buying opportunities of the pound dollar. Okay, then with this pair, let's just go back to euro pound, something that I've mentioned yesterday. Okay, because yesterday I was actually looking for selling opportunities, but on the condition that it actually broke, on the condition that it actually breaks below the 0.84 support level. Look at what pound has done overnight. or overnight as in GMT plus 8, all right? It has actually broken the 0.84 support level, okay, and it's trending downwards, all right? At the moment, there's a bit of a stagnation, I would say, all right? But yep, now that it has broken this support level, I'll be looking for selling opportunities. I'm not sure if any one of you were actually, just stocking this pair, like right after the currency call yesterday. Okay, if you guys do, you guys may actually have already entered a sell trade. Now, just a review of the trade idea. Okay, if you guys are entering a sell trade, my suggestion for a stop loss would be at the 0.843 level. Okay, 0.843 level, which is here. Okay, it's just above, okay, the 0.84 support resistance level. Okay, resistance level. Now, right now it's broken support and it's became a resistance. And then my potential profit would be at 0.812, which is around here. Okay. Once again, I would like to remind you guys, okay, Euro Pound is a pair that it moves, but it doesn't move as much as, I would say, big. It doesn't really have as big of a move as Euro dollar, Pound dollar, Euro yen, or even Pound yen. Okay, so Pound is normally, the more volatile, high impact, high action packed move kind of currency. Okay, but when it comes to Euro Pound, for some reason, the two currencies, kind of like, I don't know, counter each other from time to time. Okay, unless there's like specific news, specific hawkish or dovish news coming from the European Central Bank or the Bank of England. Otherwise, normally it tends to trend, I would say, trend nicely. Okay, it's like slow and steady, like the Australian dollar. Okay, so should you guys actually hold the trade all the way until the 0.812 TP level? You guys can try, but personally, I would prefer to keep it short term as well. Okay, because by the time you guys hold all the way to 0.812, you guys may actually have to face another interest rate hike from the Bank of England. Okay, so I think the Bank of England will be meeting this month. All right, and we can actually expect an interest rate hike coming from the central bank. All right, more on that later when the meeting draws near. All right, so as of now, Euro Pound looks like a good sell. Keep it short term, take the profits and run, because we still have many other uncertainties like the Omicron issues and things like that going on. All right, so with that, any questions on these two trades? Oh wow, Steve, great job, 22 pips in profit. Well done. Any questions on Euro Pound, Pound Dollar trade idea? If there's no questions for now, you guys know the drill. Just put your questions in the EcoFin platform and we'll get back to you shortly. All right. If there's no other questions, I will hand it back to Scott.
All right, thanks for that, Gimme. Just one thing. So in regards to the entry on the Euro Pound, if you missed the initial one, what would be your thought? Just wait until you see that pullback fatigue a little bit if you trade on the 4-hour time frame, for example.
Yep. Okay. So yeah, I think I forgot to change over to the what do you call it, H4 time frame just now. All right. But try not to trade on the daily time frame, guys, because unless you guys are doing like a swing to position kind of trade, all right, try not to trade on the daily or the weekly time frame. Okay, for me, like I said, I draw my zones on the daily time frame. All right, and I will switch my time frame, my chart down to H4 or even H1. Okay, for Euro Pound specifically, I would suggest you guys go H1. All right, look for selling, because right now, it has already broken the support, right? So look for a fast entry and then, go in fast, take the profits and come out fast. All right. For the Pound Dollar, you guys can go ahead with H4, but just try not to trade on daily, because I don't know, you guys may have to wait for the next Christmas before you guys can get some money or decide to close your trade and things like that. All right. Yep. So back to you, Scott.
All right, thanks for that, Gimme. And I'll just update the trade ideas now, everyone. And again, we are in the chat as well if anyone needs to help out. And that's it, guys. Thanks for joining us, and see you tomorrow for the yen and gold analysis. Have a great day.